Hey there, welcome back. And this is the strategy video. This is the holy grail of everything. This is something which can change your life. Okay, so let's jump into it and let's look at the strategy. Okay, so as you can see, this is the chart, how the chart looks on MetaTrader 4, MT4, and I'll tell you one by one what does everything mean here. Okay, so number one, as you can see, is the Bollinger Band 2.0. Okay, this inside band. Okay, this one and this one. These are 2.0 Bollinger Bands. So there is a deviation which is 2.0. We have set the deviation at 2.0, and outside this there is a blue band which is here and here, which is the 3.0 Bollinger Band. So we have two Bollinger Bands, 3.0 and 2.0. Other than that, there is also one inside it in the middle of these, which is the 2.5 Bollinger Band, which we don't have here right now, but in the template you'll find there. Okay, so 2.5 here somewhere in the middle, and then this blue one is 3.0. These are the Bollinger Bands. This will help us to predict where the price is gonna go. Other than that, we have the sentiment line. Okay, the third thing here, the middle line, as you can see, this black line which is going here, this is called the sentiment line, and this will help us to figure out a lot of different things which we will be learning further on in this video. Now, the fourth thing, where is it? Okay, the price moving line. As you can see, this line is the uh, is just a reflection of this price. As you can see, the candles moving up, down. So this is how the price is depicting the candles, the price. Okay, so as this goes up, comes down, you can see here goes up, comes down. So this is just a mirror image of the price on uh, this bar, which is called the traders dynamic index. Okay, now as you can see, traders dynamic index, excuse me. So this bar here, this segment is called traders dynamic index, and the upper portion here, this is called the price chart. So we have two parts in this chart. Upper one is price chart, the down the down part here is the traders dynamic index. Now we have volatility bands. So just like Bollinger Bands, here also we have the volatility bands, and there is also something which we'll be looking at. Now we have levels here: 25, 32, 50, 68 and 75. So these are levels, and which will help us to figure out when the market is oversold or overbought, and which type of trades to be opened when the price is up here at 75 or down here at 25 level. Okay, so you'll learn about that too. So just remember, these are the levels. Now, uh, what is a bullish trend and a bearish trend? As you can see, candles came down here and then went up, 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 up. So it's like uh, an upwards trend, which is called a bullish trend. Now, why they call it a bullish trend is because when a bull hits someone, he just throws that person in air. Okay, so that is how the name came. So when the candles start going up, up, up in the sky, just like a bull has thrown someone up in the air, that's called a bullish trend. Similarly, a bearish trend. So as you can see from here, the candle started falling down, 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 and there was a downward trend. So this is called a bearish trend, because when a bear kills someone, he just he just put that person in the ground. So that is how the bearish trend work. I just want you to learn these little key terms about the whole MT4 and how the price moves. so that you get a little gist of a traders and you get an idea of how a trader think. Okay, then we have uh, these little candles. Each candle takes 1 minute to end, as it's a 1 minute chart, as you can see here, GBP M1. So these are candles. Other than that, yeah, that's it, the price chart. This portion is the price chart, and this portion is the trader's dynamic index. So that's a little bit about how the chart looks and what does everything mean here. Now let's move on further. So the strategy, we trade divergence. What I mean by that is I'll tell you in a second. We trade mostly the New York session and the London session. There are 4 5 sessions: Sydney session, Asian session, London session, New York session. We can trade any session using the strategy, but we need a lot of volatility, because when the candles moves fast, so that is when all the fun is. So you need to have a little bit of volatility. The candles should be moving really fast and some nice price action should be there. So for that, you'll have to trade New York session and London session. The New York session starts from 12 p.m. to 12 p.m. GMT to 9 p.m. GMT. In London session, 7 a.m. GMT to 4 p.m. GMT. What you have to do is go to forex.timezoneconverter.com and you have to uh, select your time zone of whatever country you are in. So let's say you are in Netherlands, so just select your time zone of Netherlands and it will adjust as per your nation, and you can see when the New York session is gonna be in Netherlands or the London session is going to be in Netherlands or wherever you are. So that is uh, the time zone, the time sessions which we will be trading. Now always trade 1 hour after the session starts. So if the New York session starts at 12 p.m., you should start at 1, because there is a little bit of craziness going on when the market opens and when the market closes. So start 1 hour after the session start and go flat. I mean, don't open any trades 1 hour before it closes. So little things, but you need to pay really close attention to that. Now we will be using the Bollinger Band and the TDI to trade divergences with extreme ease. It's so easy that you are going to think what is going on. I mean, this is really easy but so powerful. It's like you know where the price is gonna go. So make sure you pay close attention. Now, what is divergence? Divergence refers to the patterns when the price in the TDI is not respecting the price in the price chart. Now, I know you must not be understanding what this means, but I will explain it to you everything in great detail now. Let's not take theory and let's move to the real life diversion examples so that you understand what I am saying. Okay, so as you can see here, the price in the TDI is not respecting the price in the price chart above. This is the price chart. This is the TDI. What is happening is new candles are building, going. Now, as the candles goes inside, I mean outside the 2.0 Bollinger Band, which is these bands, this one and this one, as these candles go outside the band, comes down and then goes again. You can see this is a high that the candles have made. Okay, but when it goes down and comes back again, there is a higher high. I mean, from this highest point, this point is higher, so this is called the higher high. But what is happening in the TDI is strange. It goes up, comes down, and it has climbed just till here. So the TDI should look something like this. I mean, this high should be lower than this high, but that's not the case. The price is not respecting. There is this high, then it comes down just like this, but when it goes back, it is not above this. I mean, it should be above this, right? but it is not. So that means the TDI is not respecting the price in the price chart above. I hope you are understanding, and that is why I am telling you, you will have to watch these videos over and over again if you're not understanding it for the first time. But I think this is pretty easy, so I don't think you should be having any problem. It goes up, comes down, goes back up, but after this high there is a big high, the higher high, but here the price is not respecting that. See the price chart, there is a high, but then candles come down, again goes upwards, and then there is another higher high. But on the TDI there is a high here, but then there is a low, I mean a lower high. There is a high, but it's lower than this high, right? So it should not be something like that. There should be a higher high mimicking the price chart. Goes up, comes down, goes higher than this point, but it is not happening. Going up, coming down, and it's just still here. So as you can see, this pattern is called a divergence. Okay, this scenario is a divergence, and this is when the price is not respecting the TDI, hence there will be a bearish movement. Now what I mean by that, there will be a bearish movement, is because the price is not respecting, the price is tired now, and after it enters 2.0 and goes up till 2.5 or till 3, it is going to drop. And this is where we open our trade in binary option. It goes till 2.5 and you open a trade that it will go down and it will go down and you will be in profits. As simple as that. Now let me show you how it works, and this is going to be exciting. Look, as you can see, it went up, came down, went back up, and it dropped then. Why it dropped? Because the price was not respecting. This is how divergence works. Now, why you need to be excited about this is because when you will be trading binary options, you'll be looking for these patterns. So let's say it goes up, comes down, then goes high, but the price is not respecting, and you will know, oh my god, there is a divergence. So as soon as it touches 2.5 band, I mean between 2 and 3, it goes in the middle, something near the middle, you will be opening your trades. So let's say you open 2 3 trades of $100 or maybe $50 or $1, $10, anything you want, and you set a timer that after 5 minutes it is going to go down. What happens is it will be mess up, it will mess a little and then go down 1 2 3 minutes. I guess the fourth minute will also be going down, and 5, or maybe it will come a little bit up, but it will not reach your point, whereas this point. Okay, so you will be in profits. So that is how you predict how the price is going to move. If you would have opened a few trades, you would have won this with extreme ease. I am so excited about this because this is making me money day in, day out, and it has taken me a lot of time to learn about it. You are getting this for the simplest and the easiest explanation. So try to understand what I am saying here. Now, there are certain rules to be followed while trading diversions, for which you'll have to check the next few slides. Okay, this is extremely easy. The diversions are really simple, but you need to follow certain rules. Okay, so let's look at the rules. The number one rule of the binary millennium method is check the news. Never trade when there is a news. 1 hour before and 1 hour after the news. Okay, what I mean by that is just go to forexfactory.com for the news and check if there is a news regarding any currency. So let's say if there is a news on GBP, then stop trading that pair or related to GBP, something like GBP, JPY, GBP, USD, Euro, GBP. If there is news related to GBP, you have to abandon all these currency pairs. Don't trade these pairs for at least 1 hour before the news hits in and after 1 hour. So this is like the first step. As soon as you sit to trade, the number one thing you do as a trader is check the news. This is the first thing you'll have to do. Okay, now this is forexfactory.com. You just go to forexfactory.com and select the time as per your country. Just set the time as per your country. So let's say you're living in the United States of America. Just set up the time as per your country. And then what you have to see here is these red boxes. What the red box implies is there is going to be a high impact news. These yellow and orange boxes, doesn't matter, but the red boxes, that means there is going to be a huge impact news. So you have to be really, you don't have to trade at that time. As soon as you can see there is a news on 4:30 a.m. on GBP, so don't trade the GBP currency pairs from 3:30 a.m. to 5:30 a.m. because the market goes crazy at the time of high impact news. Also, set the time according to your country. Very important. You don't want to be looking at news and you are seeing that there is a news at 4:30 a.m. but the time here is of some other country, and that's why you will be misreading the news. So make sure you set up your time and see at this news. Also, on the MetaTrader 4, there are headliners. So if you go to any M5 chart, the 5-minute chart, you will be looking at headlines and you can see news there also. Okay, moving forward, the next rule number 2 is don't take trade inside the Bollinger Band. Now you must be thinking, yeah, that's pretty self-explanatory. I mean, of course I'll be taking the trades when it touches the 2.5 band and goes outside 2.0. But a lot of time people get psychologically indisciplined and they lose patience, and as soon as it touches 2.0 they open a trade, and then what happens, it goes bang up to 2.5 or maybe 3.0 sometimes. So you have to make sure that only take trades after the candle crosses 2.0 or 2.5 or 3.0 band. Okay, so I'll show you what I'm talking about in the next slide. Look at this. These candles goes up, then they come down and they again go higher. Okay, sometimes you think, oh my god, the market is gonna turn just by touching the 2.0 band, and you just open a trade. Don't do that. Let it go higher, and it is going to go high. Sometimes it'll just touch 2.0 band and come down, but that is not the case every time. You have to make sure that you get 90 to 95% win rate. So make sure the candles goes up till 2.5 and then open a trade and then let it come down. Okay, and you will be in profits. As easy as that. This is a divergence, but take trades only when the candle goes outside 2.0 and touches the 2.5 or crosses it and goes. So let's say here you open one trade and it goes way above that, it touches 3.0. You can stack positions. You can take 3, 4, or maybe 1 or maybe 2 or maybe 5 positions again and stack a little bit of positions, take some more positions, and then it goes down and you are in profit. So let's look at this trade and how it turned out after the divergence here. Okay, bang, right into profits. I want you to look at it and think what this can do to your financial status. I mean, this is $10,000, $20,000 in your pocket if you trade it the right way. And you just have to make sure that both the things are open in your laptop. I mean, you should have the MetaTrader 4 and at the same time have your broker's website, let's say IQ option or maybe FX Glory, and make sure that you have the platform open on the side, and you just have to look at these charts, and as soon as it hits your conditions, meets your conditions, your rules, just open the position, click on call, click and put as per as these setups. Okay, same thing goes for when it goes down. Okay, so let's say this is a type of divergence. It goes up, comes down, crosses 2.0, comes near 2.5, but the price is not respecting it here. As you can see, this is a lower low, but this is lower than this point. Okay, but here, as you can see, here is a lower low, but there is a lower high. So there is something like a divergence here. If you would have opened a trade here, it would have gone high, high, high. And for this, you'll have to call a trade. If you're opening a trade here, just make a call that the price is gonna go up, then it goes up, 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 and you are in profit. As simple as that. Okay. Remember, this is the 1 minute chart, and every candle takes 1 minute to form. The candles are gonna make you so much money if you respect them. Okay. Rules of the BMM method, I mean the binary millionaire method. Rule number 3: let the candle come inside the band till the sentiment line, or at least close to it, for the perfect setup. I mean, there are a lot of fake diversions, and that is something which is going to make you a lot of losses. So you have to stay away from the fake diversions, and I will show you what I mean by that. Okay, look at this setup. The candles goes up, they come back to the sentiment line, and sentiment line is this middle line. Okay, it comes back to the sentiment line, messes a little bit here, goes back, touches 2.5. You open your trade here for a put, and by put you mean that the price is going to go down. You predict the prices, and what happens, it does what you think. You open a trade at 2.5, 1 2 3, 1 2 3, third candle, fourth candle, five candle. After five candles, you are deep in the money. I mean, that is the easiest cash you are going to make. And as you can see, when the candles go up, come down till the sentiment line, this is the best setup. Sometimes what happens is it goes up, comes little bit till here, and goes back here, and that is a fake divergence. Now I'll show you exactly what I mean by that. Look at this. It comes down, goes up after the red candles, the green candles formed, and then it comes down. But what is happening here is, you see, okay, it came down, went up, and there will be a little bit of divergence here, okay, for a little bit of time, when you'll open your trade here on 2.5. But what happens is it goes again down. It goes down, 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 and you miss your trade, and you are into losses. Why this happened is because you played a fake divergence. The candles came down, but you didn't let the candle go back till the sentiment line or near that sentiment line. If it comes down, goes a little bit higher and comes down back again, that is a fake divergence. Don't play it. Okay, hence always wait for the green candles to go till the sentiment line, retest, and come back outside the 2.0 again, just like this. As it went up, came down till the sentiment line, and went back again. Okay, these are the best setups. Okay, now the next rule is always make sure that in the 5 minute chart, the candles are on below or above the 2 point band 2 when you are taking a trade on the 1 minute chart. Okay, never take a divergence on the 1 minute when the 5 minute price is somewhere in the middle. So that is what you need to pay attention to. And what I mean by that is, let's pretend, let me go back here, let's pretend this is a 5 minute chart, and you are seeing a similar divergence setup on a 1 minute chart. What you have to do is make sure the candles are somewhere here. I mean, on 2.0, 2.5, 2.3, somewhere here, not in the middle. Like, let's say the price is here in the middle near sentiment line on 5 minute chart, and you are looking at a divergence on the 1 minute chart, then don't trade it, because the price from here, from the middle, it can go anywhere. If the price on the 5 minute chart is somewhere here, only then trade. Okay, so that is one rule you need to pay really close attention to. Now as you can see, there definitely must be a diversion on M1 chart when this is happening in 5 minutes. As you can see, the candle came down, went back above, came down, but this is M5. While this is happening, the M1 chart must be really nice, because there must be a divergence. M5 came down, okay, so even in M1 it must have came down, went back up, and came down below. Okay, and made a divergence. So make sure the candle is somewhere uh, touching 2.05 or 2 or 3.0 on M5 while you are trading M1. That is one rule you need to pay close attention to. Now that's the strategy, my friend. That is something which you can use and make bucket loads of money. That's pretty much about this godly strategy, and I say that with utmost passion because this strategy has changed my life. It has the power to do the same for you. Okay, and a lot of top dogs are using the same strategy that I have just explained to you to play the market and make bang. And I am talking about big Wall Street traders. Now you've got an overview of how the strategy works, right? And what the rules are to be followed to get the best setups. What you need to do is go over this video again and do it the second time, the third time. Watch this video 100 times till the time you absorb it really well. Don't worry if you don't understand everything fully, because it will take a little time to absorb everything. So watch this videos over and over again. That's what I want you to know. Apart from that, okay, there is something which I want to tell you. We are not done here, okay? You are going to love what I'm going to say now. I will be showing you live, looking at the charts, following the strategy, how I personally trade using the strategy, how it will be to see live me making the trades and making money using the same strategy. Do you want to see this? You are going to see the same, and it is going to be life changing because learning all the theory is one thing, but watching someone who is successful with the strategy to do it live is a whole another story. Okay, so I will be taking the trades and show you one right setup, I mean the best setup, and one wrong setup, which would have screwed me. And why I'll be going to show you a wrong setup is because a lot of people does this mistake by making a trade when the setup is not right. But just because it looks like a divergence, they take the trade. You don't have to do that, and that's why I'll be showing you how to make sure you are not trading a wrong setup. Now, let's see if I make money or I lose money using the same. The live trading video is something no one does and will help you to understand whatever theory you just learned now in real life action. So get ready because this is going to be fun. After watching the live trading sessions, watch this strategy video again and again and again. And I can't stress that enough. Watch it a million times if you want to, because this one skill, this one strategy is all you need to make all the money for your lifetime. And that is a big statement, but it makes sense. Now, if you have any doubts whatsoever, email me or message me. Okay, just don't keep anything to yourself. You just have to message me and I'll reply. Okay, I'll help you with this. Now, that's it for the strategy, for the theory, for the nitty gritty of it. I'll see you in the next video and we'll be looking at live trades happening on your screen. And it is going to be extremely beautiful. It's going to be so good. So make sure you watch the next video and I will see you then. That's all for this video. Bye bye.